Most of you know him from CNBC. He's been pretty much 100% right for a very long time. I don't count the 20 minutes when you were wrong in 2022 because everybody was, and you had to stay invested. So we're going to talk a little bit more about his market forecast, but I think it's important to note that Brian's been in this market for 35 years. He started at William O'Neill, which I think had to be one of the coolest experiences. Great place to start your career. I got on a plane one day and his daughter, Bill O'Neill's daughter, Lindy, sent a card up, and we've been communicating ever since, but just tells me amazing stories about her father. I mean, I was alive then, of course, and managing money, but I don't have the experience you had. But he is one of the best strategists on Wall Street. We're going to talk about his market call, as I mentioned, but listen to this. I thought I had a lot on my plate. Brian he actively sub-advises 8 equity SMAs, so 3 ETFs and 1 mutual fund, and that is against 12 separate benchmarks. So you have to have a pretty nimble mind to be building portfolios against 12 benchmarks. He has $10 billion that he oversees, and his performance has been outstanding. I'll let him talk to that. But first and foremost, welcome, Brian. Thank you for joining us.
Thank you so much for having us. This is an absolute pleasure. I am excessively humbled. And, one of the I think that life is like investing and investing is like life. It's like a bunch of stories all put together. And I think that's one of the things, Nancy, through my relationship with you, whenever we get together, we always talk about stories. And I think it's one of the things that a lot of our compatriots, meaning myself on the sell side, meaning strategists, we don't know how to tell stories anymore because we're so focused on making the big market call or, whatever double underline is. That's what my model says to do. And I don't know about you, but I don't live my life by a model. I live my life by living and having faith. And I always say that what's faith in our business fundamentals. And I've said all along that's the way I base everything that I do. And I think it's served me well. So I'm very blessed.
Yeah, absolutely. And we share that faith. So I appreciate that very much. And we're going to get Arthur to share it too. That's not why we're here. Okay. So I want you to talk about your market call. You are front and center on CNBC. You're out there. You don't shy away from comments you've made. I think one of the things that drives me craziest are the people that come on and tell you to buy a stock, and then 2 weeks later they're out of the stock, or the stock's down materially, and there's no conversation around why they were wrong or how they were wrong or what to learn from it. So talk about your forecast, and you can go back to 2022 if you like, or just 2023 and 2024 when you've been 1,000% right. And I'd like to know what you're thinking about, and I know the viewers would, 2025.
Well, first up, I got to say thank you to you, Nancy, because you put me in my place, and you put me in my place the most recent time that we had some extra time together over dinner in Florida, and you said, Brian, you should not apologize. You should not apologize to clients for being wrong. And I'm just even though I come across as convicted, I am convicted. There's no such thing as cockiness. I think it's conviction. And you can be convicted if you can stay consistent in your views and you have a process behind that. 2022 was a rough year for us, but we pivoted extremely hard mid-year when we said, you know what, this thing's not going to turn like we thought fundamentally. And then we recalibrated portfolios. And then I think since that June 1 portfolio strategy piece that we changed a lot of our stock positions, we've been massively outperforming. So I think a lot of people are on board that we're in a bull market, but I think I can count on 1 or 2 fingers how many people actually believe that we're in a 25-year secular bull market, which has been our call since 2010. Nobody believes that. And I love that. I'm a little worried that people are a little bullish now. We have the good fortune of, like the ancient philosopher Ricky Bobby said, if you ain't first, you're last. And I think we were one of the first bulls out there in print, published print, in terms of what we said. And we said actually in our year ahead piece that we published in November of 2022 that a new bull market has begun. Of course, once the market was up 20%, and it took until June, then all the people, the momentum and technical traders on Wall Street said, oh yeah, we're in a bull market. I mean, that to me is not investing. Then we went To me, 2023 was all about buying the oversold tech stocks, and then 2024 was really, oh my gosh, we got to be involved in this AI trade, and Nvidia's taking over the world. And then also too that I think a lot of people missed this whole notion of normalization. I think actually with these funny markets, we are in the process of normalizing back into maybe like an 83, 84, 85 type market.
Interesting.
Or more like a 95, 96, 97. So as soon as I say 97, they're going to say, oh, the tech market bubble. And the way I explain that is you can't say the 90s were about tech, because it was only the last 2.5 years for all intents and purposes. If you go back and really are a history of the market, you'll know that Mr. Greenspan's speech, Alan Greenspan's speech about irrational exuberance had nothing to do with technology. It was about GE, Procter & Gamble, Gillette, right, Coca-Cola trading at 40, 50 times earnings. And so it's kind of like when people talk about the 70s and disco. Remember, disco didn't come around till like late 1977, 78. That's my parallel. Anyway, we are true fundamental strategists. We look at dividend. We have a dividend discount model on the market. We have a PE regression model on the market. And we also run a macro model, which we have de-emphasized the last, really since 08, 09. Why? Because macro variables have not worked. In its testimony, it is a true testimony on why the macro strategy has been so wrong, because their models don't work, because they're
right.
They're looking at the economy, they're looking at oil prices, they're looking at consumption, all that kind of stuff. But I'll say this, if you're looking at earnings and valuation and operating performance and free cash flow and things like this, that's what has kept us bullish. That's how we that's how we look at the overall market. Then we look at sectors, then we look at industries, and then we build stocks that fit those processes and fundamental variables the best, but then we overlay fundamental themes and stories. None of this should be a secret to anybody that reads our work. We've been publishing this stuff since the mid-90s. However, as you know, in this market, nobody reads anything, nobody does the work, there's no independent thought.
The headlines, they only read the headlines.
Yep, we're so afraid to be wrong, we don't want to be right. All this stuff. So for us, I love it that you said these people that we're both on TV with, by the way, have no accountability, they have no process, they're not running real money. And that's why I go back to 2022, and I was sitting across the table from this lovely lady from Winnipeg, and she was in her 70s, and I was losing her money that year. And I met her in Naples, Florida, where I live 7 months out of the year. And she's like, Brian, what are you worried about? You've made me millions of dollars. You're going to be okay. And that really snapped. It's like she slapped me in the face.
Yeah.
And moved on. So as long as you're process driven and you sell or buy stocks based on operational risk or changes or fundamental change, you're going to be fine. If you're trying to pick a price top, or I'm going to sell when the stock hits a 52 PE or 28 P, that's all nonsense. And so we buy and sell stocks based on fundamentals, period. We also buy stocks on contrarian themes, and we can talk about that if you want.
I do want to, but I want Arthur to ask you some questions about Canada. I just want to say one thing. It is appropriate to apologize when you're wrong. You just weren't wrong. And when you pivot, I think that's exactly what we did. I don't know if we did it the same way, but we probably pivoted a little bit after you did. But something wasn't working. And so that's what professional money managers do. They make the pivot, and you did. And that's so important. I mean, what follows every bear market?
A bull market.
Yeah. So Arthur, I know you have some questions about Canada, where Brian works but doesn't live.
For obviously a little colder up there than it is in Naples.
Yeah, I was there today, and they're freaking out because of what's going on with the government. So you can clearly about that, because that's all they wanted to talk about on BNN today. Which
talking about macro, like I do political economics, probably not overly surprising, but given my background. But yeah, Trudeau just lost his basically vice PM. She stepped down. The elections have to start, I think the latest is October. And the opinion polls, I mean, if there was an election now, I mean, Trudeau's not gone. I mean, the Liberals are getting wiped out. They've lost some pretty serious elections too. So I guess the real question is, I actually like Canada because I want to get ahead of it. The new government coming in, I don't see how the Conservatives don't win unless something really weird happens. Do you think he's going to get kicked out before October, before they can actually, like, before they're forced to have an election?
I actually really don't care, Arthur, because first of all, we've been overweight Canada relative to the U.S. since mid-year, and everybody thought we were nuts. But what you think about the Canadian market is, it's really, if you strip out the banks, you strip out the top 60 companies, it's a small mid-cap market. And I know we're going to talk about SMID later, but it's a small mid-cap market, number one. Number two, if you took the entire investable universe of U.S. and Canadian names, put them all in U.S. dollars, Canada is 7% of that market. Think about that. 7% of the market. Number three, if you're a stock picker, oh my gosh, they have amazing companies up there. From Shopify to Couche-Tard to Waste Connections to Dollarama to Aritzia. I mean, these are Celestica. These are really, really great companies. And oh, by the way, I just didn't mention any banks, did I? No, or gold companies or oil companies, did I? And so we think that Canada is actually going to outperform next year. Our target for Canada is $28,500 on $1,600 of earnings. We think Canada's going to be up 15%. And everybody thinks we're nuts because the Bank of Canada's cutting and, oh, Trudeau's going to get. They're all so negative up there. It is one of the best contrarian markets ever. It is fantastic. And they're so macro oriented. Think about this now. My very good friend, worked with them for years at Merrill Lynch, David Rosenberg. Oh my gosh, the man can't, even though he's been wrong, he came out and did kind of a mea culpa. He said, I still, even though I was wrong on my timing, I still think that there's a bubble happening. How can you say that? I mean, Dave, come on, man. If he did a full mea culpa, I would be really worried, but he's always bearish. And Dave, I love you, you know that. But I just think they're so macro oriented, Arthur, and they've missed the entire boat. Remember, stocks lead earnings, which lead the economy. So I'm not waiting around for JT to get pushed out. The latest text that I'm getting on the Teams machine here is that the NDP guy said, I'm not supporting you. So, I mean, they could call, because we're American. If we're American, are like, hey, we have these elections, and blah, blah, blah. But in the parliamentary procedures, they can call an election early. So now the rhetoric is increasing that JT might get pushed out even sooner.
Well, I know they lost that really seminal election in Ontario, which had been held by the Liberal Party for like 40 or 50 years, and they lost it a squeaker, but they lost it. That was a big kind of telling thing. And I know recently the party basically met with Trudeau and had talked to him about potentially stepping down ahead of time because he's a weight around the entire party's neck.
He's not going to do that. He's not going to do that. And but did you know, Arthur, about Alberta? Alberta they've had a massive wave of population. Now, Alberta, of all of the provinces, is probably either one or two in terms of conservative thinking. And obviously oil, shocker. But they've had so many people move there. They have a massive housing shortage where 3 years ago, they were all worried about all these empty buildings and empty office buildings and all this kind of stuff. Now they don't have enough room. It's crazy. So you can see what these sea changes all over the world, but especially accentuated here in North America.
That's
with the elections, Trump and the U.S. growth rates looking like they're going to be a lot higher than, say, the historical average. Canada and Mexico are two big trading partners. That should really help Canada a lot too. So it's going to add some fuel to the fire. Yes,
very much so. And I think my theme for Canada really for the last 10 years, the Canadians don't like it because they take everything personal. But from an investment standpoint, as America goes, so goes Canada. It's really easy, right? The majority of revenues from Canada come from the United States. 90% of Canadians live within 100 miles of the U.S. border. And you think about the proximity of that. That's so important. If you think about the importance of companies like Shopify and in the Canadian banks, in the Canadian rails, it's in Couche-Tard. When Nancy drives, in Paradise Valley, and she's driving around, she sees the Circle K. You know who owns Circle K? Couche-Tard. Nobody in America knows that. It's a Canadian company. It's amazing. It's amazing.
Yeah. Well, and I think they get mad because it's a small economy complex.
Oh, exactly. When I really want to be cheeky, as they like to say in Canada, I always say, you can say the easy thing. Canada is the equivalent of the state of Texas in terms of GDP. But it's when I really want to be cheeky, I say Ohio and Pennsylvania.
We say down here, Canada's upper U.S.
Yeah, there you go. Well,
so it's going to become a state, I understand.
That's right.
Trumpy wants to cut it right down the middle of Western Ontario. Just if you go 50 miles or whatever, 50 miles west of Toronto, that's where BlackBerry and all these companies, there's this emerging little technology underground. If you go west of there, maybe take British Columbia and then give that to the east, there's your two states right there, state 51 and 52.
Oh man, I forgot how entertaining he was. I just love that he invited President Xi to his inauguration.
It's amazing.
Okay, we're going to go to, I want to pursue the contrarian theme. When we were at dinner, Brian, you said something about owning Reddit, and I hadn't even thought about that because you're kind of a GARPy guy, right?
I am GARPy by default. The majority of my thinking is GARP, right? And then I'll throw in themes, and I'll throw in also massively contrarian stuff. Reddit to me was very Reddit is not a Brian Belski type stock. First of all, I was blind with the GameStop and all that crap, and it scared the crap out of me. And then my team brought it to me, and I started thinking about this. And the reality of old media being dead, you're talking about the biggest Netflix fan ever. We were in Netflix super easy. I think Netflix and Google are taking over the world. I think YouTube's going to have streaming rights to all sports within the next 5 years. I think CBS, NBC, they're done. Anyway, Reddit, I think, is a name that we bought a year ago. we've been pretty lucky. Really? Yeah, we've been pretty lucky on that. Sometimes you have to be lucky, but that kind of fit our theme in terms of being early. We also, in terms of being more contrarian. We've done this before. We bought Starbucks in May. And the reason why I bought Starbucks, I saw the CEO, this is before Brian, on CNBC, and I'm like, this guy's getting fired. He's getting fired.
He's toast, right?
He's toast.
He looked like a deer in the head. We bought it too, by the way.
And then I went back to my process. I said, okay, you can be a contrarian just to be different, but if you have the analysis to back it up, do it. So the analysis was major operational issues, major growth issues. I'm not buying a mango tea for $9. They went way to one side in terms of their politics. And oh, by the way, the world's changing. And then all of a sudden, I bought it. I initiated in my value portfolio 1% position. And then they did the baller move, it was totally baller to go get him from Chipotle. Amazing. So what is he going to do? He's going to strip out capacity. He's going to shorten up the rest of the menu. He's going to get back to bare bones business again. That's how you reshape and reorganize a business. Fantastic. Right.
And he went in and fired a bunch of people, which I think you have to do when you have that kind of a culture's environment. But so
wasn't he the CEO? Hey, Brian, I don't know if you know this. I'm not a stock guy at all. That's why I keep Nancy around. Wasn't he the guy that said, I don't take emails or phone calls from Friday at noon on or something crazy like that, the old CEO? Didn't he make some crazy statement?
Laxman? He might have.
Yeah.
He might have.
There was all these people that said, go on.
Well, They also brought back Howard, too, in between there, right? And, and I knew that was going to be a failed venture, so.
Time. Okay, so let's, if you don't mind, Arthur, I know you want to talk about the Fed. I'm sure you have an opinion, Brian. They're going to probably cut because, they're data dependent. I think the only data they're dependent on is the Fed funds futures, but that's just me. What do you think? And Arthur, I would love your thoughts too. What do you both think about the Fed, and does it matter? And where are we? Is it going to reinflate the economy if they keep cutting?
I don't know about. I think they're going to be one and done here. I don't think they're going to go much more than this 25 basis points. They pretty much have to because they've already telegraphed that. I do think that, we were expressly critical of the Fed a year ago when we were basically jumping up and down telling everybody, why are you so focused on Fed funds futures? They've been wrong for a year and a half. And they were wrong all of this year too. They remember a year ago they said they were going to cut 6 times in 2020.
Right.
And I just don't. It's, to me, Nancy, it's amazing that these bond people have so much power still. You're talking about a 40-year secular bull market in bonds, and
Right.
nobody's giving them crap for being real. But
Right.
nobody believes of a 25-year bull market in stocks. We cannot have that. But bonds, oh yeah, we're okay with that. So
That's funny.
I just think that the dual mandate, if they can get this inflation number at least cool down a little bit, it's not going to be at their target for a while. I don't think it is, and I don't see unemployment. I don't see unemployment spiking. Oh, by the way, for you, all your macro strategists out there listening, for you to keep on saying that we need to see a spike in unemployment. You want to hear what deplorable is? That's deplorable. You want to have people lose their jobs? Come on, man.
Only economists talk this way, by the way.
I know, because you know what? They get paid to be wrong. They're like weather people. We can't.
He said to the son of the major economist.
I mean,
no, my dad's different. Like he's the most optimistic economist I've ever heard in my life.
Yeah, I mean, but most of these people are so negative. Anyway, I just think that we may see some unemployment move around a little bit, especially if this Doge situation starts firing a lot of government employees and what kind of package they have. That's all going to be really interesting on how they lay this out, because Trumpy can't have unemployment spiking. He can't have that either. So
right.
It'd be really interesting on how they roll that out.
And lay out at the same time. I mean, you can replace a lot of those workers. I mean, AI is going to do. We were talking about AI last week, Brian, but AI is going to help that too.
Mm-hmm. Mm-hmm.
Good. Okay. Well, so you're not worried about the yield curve steepening, and
I think the yield curve steepening actually be good for financials, right? And if the rates be good, and I think financials are the one that everyone is massively underweight. They don't get that the deregulation is a really, really big deal. We're gonna have massive consolidation. There's 600 publicly traded banks in the United States, 4,000 banks overall. Too many, too much capacity, and we need to see some consolidation there, because the middle-sized banks can't compete with the big ones. Oh, by the way, they can't compete with the small ones either. Like, say if you're like Tangler Bank in Paradise Valley, right? You probably sip wine with the person that owns the wine store across the street, Nancy. When she or he needs a new loan to build another wine store, do you think they're going to go to Citigroup or JP Morgan for the loan? No. They're going to Tangler Financial. Why? Because it's about the relationships. So I think the really, really small banks are going to do really well because of that. And I think the really big banks, because of the capacity and scale, are going to do really well. Everything in between, no good. And then they'll benefit from the steepening of the yield curve.
That is so smart.
The only exception I would say to that is banks typically are a proxy for the economy that they're exposed to. So if it's a mid bank, and I'd say right now, Brian, if it's in the South, those banks should probably do disproportionately better than a small bank or a mid bank should do well if it's in the right place. If you're a California mid bank or overexposed to the bad states,
you're
a proxy for the local economy.
That's why we own a bank called Regions Financial, because they're in the right area of the country, or Synovus, right area of the country, Glacier Bancorp, right area of the country. So it is all about location. To me, Arthur, the ones that are in trouble, Barney Rubble, are the Truists and the Key Banks and the U.S. banks, that they can't compete with the Canadian banks that have massive balance sheets, or Citigroup, JP Morgan, Bank of America.
Right. Okay, guys. So we got a minute, and I want Brian to talk about anything he wants to. What did we not ask you that you think super important? Toot your own horn. I've already done that, but you can do it too.
But only buy stuff that you know. That's what I've kind of lived by that. So Reddit's kind of sexy, but I got to know it, and it made sense to me. If it makes common sense and you can reach out and touch it, buy it. That's why Costco is such an amazing company. That's why Google, Netflix, Tesla, Spotify. These are great companies that are part of your life. Apple, one of the greatest companies of all time. So you buy stuff that you use and that you understand. Don't try to go over your skis. Don't try to be the smartest person in the room. And always, always, always act justly, love mercy, and walk humbly. You absolutely, positively have to live by those 3 rules.
Oh, I love you, and I love having you. It was so much fun. Your time is so valuable. Arthur and I appreciate it very much.
Thank you.
So
Great
yeah,
to meet you, Brian.
Thank you so much, guys.
enjoy
Merry
New
Christmas.
York.
Merry Christmas.
Merry Christmas.
Thank you.
All right. See ya.
ya.